Welcome back to our channel. Today we're diving deep into the world of security token offerings, or STOs. These innovative financial instruments are transforming how companies raise capital and how investors participate in the market. Whether you're an investor, entrepreneur, or simply curious about the future of finance, this comprehensive guide will provide you with everything you need to know about STOs. Let's get started. Introduction to Security Token Offering STOs. Let's begin with the basics. A security token offering, or STO, is a fundraising mechanism where investors receive security tokens in exchange for their investment. Unlike initial coin offerings, ICOs, which often involve utility tokens, STOs represent ownership in a company or asset, similar to traditional securities like stocks and bonds. STOs combine the benefits of blockchain technology with the regulatory framework of traditional securities, offering a more secure and compliant way to raise capital. The evolution of fundraising from IPOs to STOs. To understand STOs, it's essential to look at the evolution of fundraising mechanisms. Initial public offerings, IPOs, the traditional method for companies to go public and raise capital by issuing shares to the public. IPOs are highly regulated and often involve significant costs and time. Crowdfunding, a more recent innovation allowing companies to raise small amounts of capital from a large number of people, usually through online platforms. Initial coin offerings, ICOs, with the rise of blockchain technology, ICOs became a popular way for startups to raise funds by issuing tokens. However, the lack of regulation led to numerous scams and legal challenges. Security token offering STOs, combining the regulatory oversight of traditional securities with the efficiency of blockchain technology. STOs offer a compliant and secure way to raise capital through tokenized securities. Key features of security tokens. Security tokens have several key features that set them apart from other types of tokens and traditional securities. Regulatory compliance. Security tokens are issued in compliance with existing securities laws, reducing the risk of legal issues and ensuring investor protection. Ownership rights. Security tokens represent ownership in a company, asset, or investment vehicle, providing investors with rights such as dividends, profit sharing, and voting rights. Transparency. The use of blockchain technology ensures that all transactions are transparent and immutable, providing a clear record of ownership and transfers. Liquidity. Security tokens can be traded on secondary markets, providing liquidity to investors and enabling fractional ownership of traditionally illiquid assets. Efficiency. The use of smart contracts automates processes such as dividend payments, reducing administrative costs and increasing efficiency. Types of security tokens. There are several types of security tokens, each representing different kinds of assets and ownership structures. Equity tokens represent ownership in a company, similar to traditional shares. Investors may receive dividends and have voting rights. Debt tokens represent a loan made to the issuer, similar to a bond. Investors receive periodic interest payments and the return of principal upon maturity. Real estate tokens represent ownership in real estate properties, allowing for fractional ownership and easier trading of real estate assets. Commodity tokens represent ownership of physical commodities such as gold, oil, or agricultural products. Investment fund tokens represent ownership in a fund that holds a portfolio of assets, providing investors with exposure to a diversified range of investments. How security token offering STOs work. The process of conducting a security token offering involves several steps. Preparation. The issuer prepares the necessary legal and regulatory documentation, including a prospectus or white paper outlining the details of the offering. Token creation. The security tokens are created on a blockchain platform using smart contracts to define the terms and conditions of the offering. Regulatory compliance. The issuer ensures compliance with relevant securities laws, which may include registering the offering with regulatory authorities and conducting Know Your Customer (QIC) and anti-money laundering (AML) checks on investors. Marketing and distribution. The issuer markets the offering to potential investors through various channels, such as online platforms, investor networks, and public relations campaigns. Token sale. Investors purchase the security tokens using fiat currency or cryptocurrency. the tokens are then distributed to the investors' wallets. Post-offering management, the issuer manages ongoing compliance and investor relations, including the distribution of dividends, interest payments, and updates on the performance of the underlying assets. Advantages of security token offerings. STOs. Security token offerings offer numerous advantages over traditional fundraising methods and other types of token offerings. Regulatory compliance. STOs adhere to existing securities laws, providing legal certainty and protection for investors. Increased liquidity. Security tokens can be traded on secondary markets, offering liquidity to investors and enabling fractional ownership of traditionally illiquid assets. Global accessibility. STOs can attract a global pool of investors, expanding the potential market for issuers. Cost efficiency. The use of blockchain technology in smart contracts reduces administrative costs and increases efficiency in managing the offering and ongoing compliance. Transparency and security. Blockchain technology ensures transparency and security in transactions, providing a clear record of ownership and transfers. Innovation and flexibility. STOs offer innovative ways to structure and manage investments, providing flexibility for issuers and investors. Challenges and considerations. While STOs offer numerous benefits, they also come with challenges and considerations. Regulatory complexity. Navigating the regulatory landscape for securities can be complex and time-consuming, requiring legal expertise and resources. Market adoption. The adoption of STOs is still in its early stages, and there may be limited liquidity and trading venues for security tokens. Technology risks. The use of blockchain technology introduces risks such as smart contract vulnerabilities and cybersecurity threats. Investor education. Educating investors about the benefits and risks of STOs is crucial for widespread adoption and participation. Costs. While STOs can be more cost-efficient than traditional methods, they still involve significant costs for legal, regulatory, and technological requirements. Regulatory frameworks for STOs. STOs operate within the regulatory frameworks of securities laws, which vary by jurisdiction. Key regulatory bodies and frameworks include: United States, the Securities and Exchange Commission (SEC) regulates STOs under the Securities Act of 1933 and the Securities Exchange Act of 1934. STOs may need to comply with exemptions such as Regulation D, Regulation S, or Regulation A. European Union. The European Securities and Markets Authority (ESMA) oversees STOs within the EU. STOs must comply with regulations such as the Prospectus Regulation and the Markets in Financial Instruments Directive (MiFID II). Asia. Regulatory approaches vary by country. For example, in Singapore, the Monetary Authority (MAS) regulates STOs under the Securities and Futures Act. In Japan, the Financial Services Agency (FSA) oversees STOs under the Financial Instruments and Exchange Act. Other jurisdictions. Countries such as Switzerland, Canada, and Australia have their own regulatory frameworks for STOs, providing different levels of oversight and requirements. In conclusion, security token offerings represent a significant innovation in the world of finance, combining the benefits of blockchain technology with the regulatory framework of traditional securities. STOs offer a secure, compliant, and efficient way to raise capital and invest in a wide range of assets. As the industry continues to evolve, STOs have the potential to transform how we think about fundraising, investing, and asset ownership. Whether you're an investor looking for new opportunities or a company seeking to raise capital, understanding STOs and their implications is essential for staying ahead in the ever-changing financial landscape. Thank you for joining us on this comprehensive journey through security token offerings. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more in-depth content on the latest trends and innovations in finance and technology. Until next time, stay informed and stay ahead.